Good morning, retail traders. I'm the Sneaky Snake Trader. Sneaky Snake structured on chart patterns, moving averages, and being in the now. And I'm going to show you how I look at the SPY every morning, how I chart it up, how I get my supports and my resistance levels. Now, it changes time from time. It really depends on you being in the now, which is the third part of my strategy on how to trade the Sneaky Snake. So we're going to go right straight ahead and just chart the SPY only. And what they used to say in the market, if you're in doubt, zoom out. So we're going to go to the 90-day, 1 hour time frame. First, I want to look at the yearly. I go through a lot of different time frames when I'm looking at these charts. And I notice on the weekly here, we hit that resistance level that I've been talking about. We hit it Friday, and we had a pretty nice some knives off that resistance level. Now I'll take the body of this candle right here, and I'll just go ahead and put that in there right there. And then we've got the 9 EMA, so I use the moving averages as support level, and we've got the 21 EMAs right here. It's the 9 EMA and the 21 EMA. So that would be my lowest possible supports if we do decide to have a little sell-off this week, a little pullback. Now, part 3 is being in the now. We got a lot of stuff coming out this week. We got some big conferences coming up with some major tech stocks. Then we've got the pow coming out on Wednesday to lower the interest rate, which everybody is almost possessed that we are going to have a rate cut. I'm even starting to think that myself. The market believes that we've already priced in the first one at 2.5, so that could cause a little bit of consolidation in the market. And if we get 50, it could cause a little bounce in the market. So, and I don't think it's going to matter about the election. I think they put it off so long, and they're way behind the curve that it doesn't really matter. We're not going to look at it. Oh well, he cut the rates, so he's trying to persuade the election. I don't think that's the case this time, and because it's well overdue. The rate hikes were way overdone. They were behind the curve then too. The market is always behind the curve. Now I know these fat cats, they say the market dictates on how they trade. Well, I personally don't believe that. Technically, I'm a technical trader, not a fundamental trader. So I believe the charts tell me where resistance is and where support is. So we did have an all-time triple top or a high here. Each one of these represent a week. There's patterns on this here. We've got 3 black crows, 3 black crows, 3 white soldiers. Then we've got that doji up here. Some would call it a dragonfly. And we had that big pullback. And then we had the bounce back up, all within 1 week of each. So there were very dramatic pullbacks and very dramatic upside to the market, which means the market's very bullish to break this resistance at 562.16, and we closed at 562.01. So pretty sure that's pretty much right on. Yeah. And the high resistance would be definitely the 565.16 if we do decide to break. Now, if we do decide to break, we have to think very bullishly about this market, and we could break that and move to higher levels. So, I'm not going to be 100% about the 562.16, but that's what I'm going to use today as a reference to tell me if we're bullish or bearish. Then I'm going to put a price line right here on the 9. And I'm going to put one on the 21. And I'm actually going to bring it up to the body of this candle. So we'll remove that, and I'll make it closer to the body of that candle. Right there at 539, almost 534. So now I'm going to take this to the yearly. I know this is going to be a real hard resistance to break, and I know this is going to be a solid support to hold. So I'm going to go to the yearly daily. Now I'm just trying to show you how I chart the SPY every morning, what I look for. We had a nice little back run up to that resistance level. We did break it last time, and I'm going to call this an overhead resistance. So I'm going to take a trend line, and we'll go from the body of that candle right there and connect it to the body of this one. I'm going to change just the color because I know that that's my overhead resistance, and that's going to be another hard resistance to break, and I'll put it in blue. And I think we almost hit that. We also hit that on Friday. So that's called a triple top overhead resistance. We got 3 white soldiers with a nice big old hammer right here. These are all bullish candlesticks, except for this one right here. Just found resistance at that overhead resistance. So when you're in doubt, always zoom out. Now, we could take each one of these bodies and put a support line right there. That's what I'm going to do right here. So I'm going to go put a price line on the body of that candle. This one right here. And we'll put another one right here. So I've got all my supports already on here right now. I don't have to mess around with that. Now I'm going to move this to the 90-day 1 hour. And I'm going to see if I missed anything in here. We have resistance here, we have resistance here, we have support here, we have support here. So I'm going to call that the pivot point for this week. And I'm going to change that into red. And I'm going to put a label on this so I can remember. I'll come down here and I'll go into drawings or take a note, and I'm going to type in a note right here. Pivot point at 555. For right now. So that, I know that that's a pivot point. If we come back and hit that pivot point, I think that'll be a real strong buy. A pivot point is telling you that it's either going to hold support, and if you were below it, it would be you're getting ready to break a resistance. So it's a decisive factor if it's going to hold, or if it's going. Anything above it is resistance. Anything below it is support, a low support. So I think that's pretty much charted up to where I want to look at it. Now I'm looking at the hour when I come in the morning. Just kind of give me a little guideline of where things are. And to me, that says a solid pivot point area right there. So we could pull back, or we could break this resistance level. And that resistance level is going to be charted up with a price line. And I'm going to put it right on that blue line. And I'm going to come out here a little bit so I can right about there. No, cancel left extension 563.22 is going to be our hard resistance to break today, if we decide to move up this week. If not, I think we could pull back and hit each one of these moving averages. Right now, we're above the 9. We're squeezing between the 21 and the 9. So if that 9 starts to cross down, I could be looking at this here 21 EMA, or 63 EMA. And that's the red line. So I'm going to put in a little alert above this 559.36 to catch my attention when it comes time to take this trade. And I'm going to set an alert. I got it at the mark at below of 559.68, which tells me I think it can go a little bit lower and hit this price line right here at 559.36, or come back and hit the 21 on the 1 hour. And then if that doesn't hold, the next one down is definitely the pivot point area above the 200 EMA. So I'm going to put one more alert right on top of this here triple top break. 1, 2, 3. I'm going to put my alert right there. Now I've got 2 alerts set for this here for this week. And if that doesn't hold, we'll get down here to the 200 for a very strong buy. Now what do I see here? I see a head and shoulders. I see the left shoulder right here. I see the head. and then I see the right shoulder right here off the 200, so that's definitely a strong support, and I want to note that. And I'm going to come over here and look for what I think would be an equilibrium where the bodies of these candles touch the most together, and I'm catching it on this one right here. It could be that one, it could be that one, but I'm bringing it down because I know that that 200 means everything to me. And I'm going to put me on an alert right there for my third alert for this week. Now I'm charting this up as a weekly review, and things can change day by day, so I'll come in and rechart it again and just kind of look it over and see where we went. But that's more or less how I chart it up. And then when I look at it for a day trade in the morning, I'm going to look for another support down here, and this is going to be a solid support. And what I'm going to tell myself, it's either going to hold this area, and if it doesn't, we can pull back some more. And I'm going to catch it right here off this right shoulder, left shoulder. You got a left shoulder, left shoulder, left shoulder. Then you got the head, and you got the right shoulder right here, which didn't quite, it hit right here, but it didn't hit quite right here. So I'm going to put another alert right there and call this an inverse head and shoulders, and set that alert right above that for a morning day trade. And I'll be setting at it below. So I more or less don't want to mess this up too much. There is another support level right down here. So if this doesn't hold, I'm going to be looking for the next support levels to try to scalp this trade. And I'm not going to do it until I see a snake breakout, pullback, boom. Somewhat like here. You got the snake breakout, pullback, boom. And I'll be looking for the same thing when we pull back here. So that's basically how I chart it up. We'll move back to the 20-day 1 hour, just kind of get a nice little preview. I know the pivot point is 555, and that should hold this week. If not, then we're going to start being a little bit bearish, and we could catch it off the first support down here off the 200 SMA. I use these moving averages quite a bit for support levels and resistance levels. I've been charting moving averages for over 20 years, and I've tried to find the best ones that work for me in my time frames. It could be different in your time frame, so you need to adjust your moving averages to what kind of time frame you like to trade in. But me, I've showed you exactly how I like to look at things. I go to that 1 minute because I see things happen before they happen. 5 minute, you're just kind of looking at candlesticks. You don't see the actual movement of the stock. But a lot of people use the 5 minute, and I ain't gonna cut. I don't use it as much but I have here lately because I got so many people out there that trade the 5 minute. And personally, I like to see what's going on in the stock. That's why I use a 1 minute, because they build patterns, and part of my strategy is all about patterns. And you see a lot more patterns than you do if you're looking at a 5 minute. It's very limited in your judgment, but it's still a good way to go. I'm not going to cut you down for using the 5 minute. So that's it. This is the sneaky snake trading strategy, how I chart every morning, the SPY, and what I look for, and then I just be patient and wait for my trend lines to hit. And if I feel good, if I'm keeping in the now, I want to know how the fat cats are thinking. I don't think quite like they do. They're pumpers. They get into a stock and they just keep pumping the same stock over and over and over. I take their stocks and I use them, and I trade them day by day by day by day every day. I'm in and out, in and out, in and out. And I probably make 3-4 times more than they would if they held onto the stock and just kept waiting and waiting and waiting. I'm cashing in. Man, I get a big old engulfing candle to the upside, like Friday, to the downside. I got into a put at a triple top, and people were freaking out because I bought the put. 3 minutes later, my SPX went from $360 up to $1,100 in 3 minutes. So kind of think about that when you're in these trades. If you see a triple top, man, I take my profit. I don't hesitate, and I don't care if it breaks out, because I'll catch it on the pullback. Once it breaks out, it always pulls back to that old resistance, and I can jump in it again if I want to trade it. So have a great day. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.